Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. I'm Frances Cook, Investments Editor for BusinessDesk. Now today we are joined by Anna Scott, CEO of Smartshares. We're going to talk all things ETFs. But first, very important information for you.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome, Anna. Thank you so much for coming on to talk to us. You are newly in the hot seat as the CEO. Yeah, tell us, why join Smartshares? What attracted you to the role?
I think it was a combination of right place, right time. So I was about 18 months ago looking for a new challenge in a role, and the role became available at Smartshares. But the bit that really attracted me is, I think, my kind of history in terms of career, but education. Started as an engineer, so it was around problem solving. When I say engineer, everyone always thinks, oh my God, you do roads or bridges. But I did engineering science, which was mathematical based. So early comfort with numbers, but also that problem solving, and I think that stood me in great stead across my career. So the attractiveness for me about Smartshares was that it was at a place where it's gone through a lot of accumulation and growth, but there was a realisation that it needs to spend some time consolidating that and then setting up for the platform for the future growth. So that point of inflection almost in the company around how do we pull that together and build something for the future was really appealing to me and my skill set.
So when you say there, early comfort with numbers, couldn't identify less. No, I'm so glad people like you exist. So are you a spreadsheets kind of person? You're that kind of happy with numbers person?
Yep, love a good spreadsheet. I have to admit, as I've gone on my management journey, I spend less time in the back end of spreadsheets and more time reading other people's. But yeah, an early interest in, and I love the fact with numbers that you could get to the end and there was an answer. But you could pick it apart and figure out how that answer got put together. So, yep, definitely keen. Interestingly, not the same with my two kids.
Oh.
So, yeah, one of my children, my son, really believes that numbers and letters don't go together. And so, our brains all work differently.
They do reckon that it sort of skips generations, that often the grandparents and grandkids will be more similar, so they just hold out, give it a couple of decades. Okay, so a fund manager like Smartshares, what do you actually do?
Our job is to create investment vehicles which are funds. And so a fund can have one thing that's invested in or many. Most of the time they have many. And so we choose the index with care because we're deciding what it is that we want to track. So that might be the US market, the US 500. But someone called S&P creates that index. So we are purchasing the index off them and then we track it. And so our job is to hold a bunch of securities that reflect that index. And we're buying and selling those to track how that index performs so that you've got a market tracking product that keeps you in line with what that market's doing without having to worry about which underlying securities to buy.
And you've talked a bit there as well about how you want to sort of refine what you're doing and check that you're doing the right things for Smartshares and your customers. Where's that journey going for you? Tell me more.
So I think that New Zealand, we're at the bottom of the earth there. Well, maybe not if you turn it upside down. But
anytime you look at flight prices, it feels definitely bottom of the earth.
It does, right? And so we're not reinventing the wheel here. You can look elsewhere, particularly to ETF markets like America, that has definitely driven that charge. Europe in different jurisdictions. Australia now, where ETFs are becoming more popular. So what we want to do is to use some of those excellent experiences or knowledge that we can gain from offshore and figure out how we bring it back home and how do we benefit that for the investor in New Zealand.
Ooh. What might that look like in reality? What might customers and investors notice?
So probably a little bit more of a refinement around our purpose, and we're going to do a rebranding later this year because we have a couple of different distinct business lines that have all got different names. So obviously our Sharesies customers know us about Smartshares because that's our ETFs, but we also have a Key Street brand and a Superlife brand, and so we want to be really clear about what all those brands actually do and bring it home under one umbrella so that we can explain. But also in terms of, we're owned by the NZX, and so as part of that ownership of the New Zealand's exchange, I think there comes a responsibility to be part of that market infrastructure around education and awareness. So you're going to see more from us in that space in terms of trying to make simple messages understandable to get more investors coming into that space. And we're doing that in a way that isn't all about you can only invest with us, because I just think that diversification is really important in your investing journey. So we want to be a part of that ecosystem and partner with other people in the value chain, like a Sharesies in terms of retail trading platforms, with other people in that space, with people who are blogging about in education. So how can we support that overall growth? And how do we do it back at our core around product manufacture? So what have we got that are core funds and ETFs that we think in terms of being called core are vital for any part of a diversified asset allocation? So if you're building your portfolio from the ground up, what do we think the ingredients list is that you should have on your menu? You can put the menu together however you like, but we think these are the core ingredients you should use. And then a specialist series, which is more what I call the explore. So if you've got your solid core and then you explore around the outside. So in your specialist series, what have you got in there that's of topical interest perhaps, as a theme or as a market segment that's more specific in the market, that we think that people have their own personal views and opinions, and how do they express those with another product? But the core is where you should go for your foundation building blocks.
Yeah, it's so interesting because I'm hearing a lot of those echoes in the market at the moment. It's very much honing in on the type of investing people seem to be attracted to at the moment. I mean, when I think smart shares, I think ETFs. That is just the very first thing. It's almost like one of those word association games that I would spit out. So let's start at the very beginning before we dive into the weeds a bit more. What is an ETF? What does it offer for people?
Yeah. So it's one of those things, I often laugh and call them JARs, but it's just another acronym. And we feel like we're so full of those in financial services, you almost need a little library to keep track of. But your ETF is an exchange traded fund. So it's an investment structure. It's an investment vehicle. It happens to be a listed one. So that fund can hold one or many underlying investments, and we put it on the exchange so that it can be traded like a direct security, which means that you've got transparency on the market because you've got market liquidity. So you can see what the price is, and when you buy and sell, you know exactly what value you're getting for it right then and there. You don't have to wait for the end of the day. But also there are market participants. So there are brokers who you can buy and sell those through. There are dealers who are market makers who make sure that there's liquidity. But then you've also got the underlying securities underneath, and so those will have liquidity in themselves because you're buying and selling stocks to hold in your fund. The specialty about New Zealand ETFs is that they are part of our PI regime. And so PI is a tax regime that ensures that portfolio investment entity, so again you can put them together as a group, but that PI gives you final tax rate. And a listed PI gives you final tax rate at 28%. So when sometimes people talk about the tax efficiency, and I'm no tax advisor, but the tax efficiency of a direct holding versus a PI holding, then on a direct holding you could be taxed at 39, and in your PI, a listed PI, it's 28. And so that's where sometimes people talk about that differential, and it might be more tax efficient.
Yeah, the tax issue is a funny one because people always ask me questions about tax, and it can very much vary person to person. So I almost have PTSD on trying to answer people's tax questions. The amount of disclaimers I will give before wading into it, so different depending on your situation. But the PI structure, as you say, on funds is designed to... It's not tax avoidance. It's so different from tax avoidance. It is a reward, basically, for investing smartly. It was deliberately put in place for you to take advantage of, right? Using the PI structure, if you are a high earner, it is meant to reward you for taking care of your financial future and hopefully not being a burden in the future.
Yeah, and investing in the New Zealand economy.
Yeah.
And so, yeah, totally agree. But it is a minefield of different variables and different circumstances. And so it's one of those things that you have to figure out what's right for you. But again, in that education, what we want to be working towards is be able to talk around that total cost of ownership, because there are people talk about tax as the big tagline of why you should or shouldn't, but you've also got other charges in that value chain. So you'll have brokerage, what it costs you to trade, right? That's a transaction cost. You might have a holding cost. So if you want to buy an offshore ETF instead of a New Zealand one, then the cost of holding that with your custodian will be more expensive probably. So there are so many other variables to wrap up into which type of ETF should I be buying.
Mm-hmm. Let's touch on this a bit more because I was going to ask you about this later, but we're here already. when people look at investing in overseas markets, there can be different taxes on that, right? Is there a difference between investing in overseas markets through a fund manager like yourself versus going direct? Are there different tax implications there?
Yeah, there can be. And so it depends where. So if you're going offshore, let's just talk about two examples, right? If you went to Australia or you went to America. So both of those have different double taxation treaties back with New Zealand too. So even then, the underlying tax treatment of their investment vehicle in their own country will have a different local tax structure, but it also has different implications if you're an offshore investor versus if you're an onshore investor. So
love this for us.
I know. So one of the things I think, and why we believe in New Zealand ETFs being accessible, is that it gives you that offshore exposure. So if you wanted to do the US 500, could you go directly and buy it? You could. If you buy it here, what are those benefits then? Well, what we've done is we've wrapped it up, and people talk about wrappers, so we could explain that too, but we have taken that and put it into a local version. So you can buy it, sell it here on the local exchange, which means you know exactly what your brokerage costs are and your ongoing custodial holding charges are, because they're local to you in your current portfolio. But also, we've taken out the currency risk. So instead of knowing you have to do a foreign exchange conversion into US dollars to buy the US dollar thing, you've bought it in the New Zealand dollar equivalent. So the idea being that when we're doing it here, then we're going to get access to bulk buying dollar exchange rates, right? Rather than you doing it once on your small value of money. So that local currency conversion is what people also talk about in as advantage. So then you don't have to worry about, can I get my tax back or not? You're actually just buying local products here, which are all being able to be treated in the same way.
Yeah, keep it a little bit simpler.
Yeah.
Let's rewind a bit on that, because as we've talked about a bit already, there can be different ETFs that give you exposure to different markets. Of course, there are the glorious global ETFs, but there's also, you can focus on ones that are based in New Zealand, based in Australia, based in the US. Are there differences in how you approach those outside of what we've already talked about with tax implications and things?
Yeah, so sometime will be the price as well. And so what we do here when we're manufacturing a product is we look at what's the demand for that product, and therefore how much money do we think that we're going to come into it, because a fund is successful when it has more funds in there under management. And you'd like to think, and it does work, that you drive economies of scale. So the actual cost of running the fund gets cheaper spread across all investors when there's more people in there. So there's a threshold that you need to kind of think about commercially, that it makes a fund viable to run and cost effective. So when we look at what a new product might be, we think about that. What's the appeal to investors? What's the demand for that? And then depending on how much FUM that we think we might get in the fund, then we look at what's the best way to do that. So if it was exposure to the US 500, for instance, does it make sense for us to buy another manufacturer's product and just have that as our one holding with a bit of cash for liquidity? And that's what we hold here. And then over time, as that gets bigger and bigger, do the economics change for our investors that we should no longer hold the single fund as a representation, but we should go and buy all those underlying individual securities ourselves? And now we hold the individual stocks. And when you get into that, then there's more tax, because what's the tax treaty on and treatment on holding that? But those are our kind of levels of, and that's why, again, start simple. So if you're a New Zealand investor, start simple with New Zealand products. And then as you get more sophisticated, so you've got more experience or you've got more money, then you can look at what that might mean for you. So we do exactly the same thing. We start simple, we get something up and off the ground by having it use one single product of someone else's offshore, and then we expand that as we go.
And speaking of demand, what do you see are the areas that investors are interested in? We've seen all sorts of different trends in terms of different themed funds, different industries, different countries. We've even got Bitcoin ETFs now. What are you seeing that investors are keen on?
And so it's a bit of both. It's back to that core and explore. So I think when we look at the core, what are the big ones that everyone comes back to all the time at putting in their core? And for us and for the Smartshares products on the Sharesies platform, those are around the New Zealand top 50. the US 500 and the US high growth. So people have been wanting those for quite a while, and that's where most of that investment has built up. Interestingly, in the last 3 months of investment, 80% of people have been buying the US 500. So that trend that you see and talk about is definitely there. And I think that's about returns, because people see in the globe, when I look at the whole globe and I'm thinking about which baskets should I put my eggs into, then in that asset allocation and diversification, people are seeing the growth of the US market, and there's a big story around that. So you want a slice of that action. And rather than having to worry about, oh my God, which US stocks should I choose? It's like looking for the needle in the haystack, right? Well, then I can just buy the whole haystack. And it's a very efficient market in America, and it's got global connections throughout its distribution and supplier framework. So it's a good place to go if you want long-term accumulation. But then in the explore place, there are a lot of current themes. And so when we look at our suite of ETFs, the majority of those are in that core. They're very much about a specific market. But we've got a healthcare, we've got a robotics and automation, so other things that are themes. But the things that people are also talking about, Bitcoin, a gold, as it goes up, because it's always been a safe haven for cash, perhaps, and we're exploring that. Some people have asked around the Magnificent Seven. Can you just craft a fund that just holds those? And is that of interest? And then there's also been some more interest around fixed income. And that comes back to that tax thing. Can we find a way to use that PI regime to give you the tax efficiency of final tax at 28% instead of a direct security, perhaps? So we're starting to explore some of those things. But it all comes back to where's the demand for those, so that you can have it as a long-running product, not just a short-term one.
Is there anything on your radar that you don't currently offer that you are getting a lot of demand for and that you're actively looking at?
So a couple of those in that list we are actively looking at. And it's always interesting too in terms of a lot of demand. So, when does talk turn into actual money to invest? And so that's part of the exploring too, right? Trying to almost kind of build a sense of what you might be able to start that fund with in terms of FUM, to know that it's then got legs to keep carrying on.
On the Bitcoin ETFs, because I think it was February that they finally got the approval from the US regulators to bring in these Bitcoin ETFs. Huge change, and a real change in terms of it becoming more mainstream. There were kind of workarounds where you could invest into crypto through the stock exchange, but this is the first time you can invest into actual Bitcoin. What have you seen in terms of the investor response, and has it changed much for your business?
So definitely a lot more interest. And I think Bitcoin's one of those controversial, you definitely get two sides of the coin, where people sit on that. But I think the interesting thing for us thinking about would we do one of those products or not, as with any product. But in that one, you're not buying the actual Bitcoin. That's the purpose of the investment vehicle, right? And so when we talk about it's a wrapper, you are essentially like Christmas paper wrapping up in a local PI regime some underlying holdings. Same as if you wanted to believe gold, or where some people want to use the themes, right? For an institutional client might believe that I think the entire Japan economy is due for an increase in growth. So therefore a good way to express that opinion is actually to buy an ETF that's a Japanese ETF, because it's wrapping up the whole market for you. And so then you're going to get the benefit of market growth, not just one Japanese company's growth.
And you also mentioned there, let's put them together, the fixed income and the gold, because a lot of people will understand the share market as you're investing into businesses, right? But of course, through funds, through ETFs, you can also access things that are investments, but not necessarily businesses, or a different side of businesses, things like the fixed income where you're investing into debt. So what is the level of interest in those other types of investments? Is it as much as the traditional shares?
Yeah, and so as you said, it's more complex to put together and it's not as easy to understand, but there's still underlying kind of security investment products. So then when you're creating that fund, you need to think about what the fund's objective is, and that's when you choose what are we trying to track here. And that's what I like about ETFs, because they are about tracking a market. And so if part of the market is a fixed income market, then how do you construct that? Are we trying to give investors a return as in regular dividend type income based on periods of time? And if that's the case, then we're going to choose certain bonds to buy to create that portfolio as a fund structure and give people that investment return. And so what it does is it takes the complexity out of an individual needing to put a variety of those things together to get what they want, and instead you can buy one fund that gives you the stated objective. So it's not always going to be an individual security in there. And that's why you've got to read what is the objective, what are you expecting to do with it.
One thing that I think doesn't get talked about enough with ETFs is the way that they're put together, because as you've already touched on, it can get remarkably technical on the back end as you're putting together these funds for people to invest into. And they're also weighted, right? So it's not that you buy into, there's all these different companies in there and your dollars are split equally amongst them all. They're often split in different percentages based on different values. Talk me through that process and how you decide on it.
Okay, so good example, right, the US 500, because at the moment it's pretty much top heavy, right? So 30% of that index or that market has got 10 companies in it. And so you're not spreading your money equally, but that's the point of buying the haystack, so that if you want to track and get a return equivalent to what the S&P 500 is doing, then our job is to take and say, yep, that's our objective. We're tracking that index. So our job and how you rate our performance as a fund manager in that case is how closely do we track the return. So when you call up the S&P 500's returns and you call up our fund's returns, you want those to be as close together as possible, because that's what we've given you as an objective of the fund. Don't have to go and buy 500 stocks and worry about what ratio you're meant to buy them in. You're buying our one fund that does that for you. So what we're doing is tracking that index. So on a S&P as an index provider will rebalance quarterly. So when that happens, what we're looking for is how has that whole market performed? Has Nvidia gone up or down in terms of its value and its comparative weighting? And therefore on a quarterly basis, if Nvidia, let's say, was 10% of the S&P 500 and now it's 8, then we're going to adjust our holding of Nvidia equally so that we're back to matching the market. So we are driven by how that market performs and how those underlying stocks perform, and then our job is to make sure we're tracking and mirroring those ratios in that market in terms of the ratios that we're holding in our fund as well.
And it's tricky, right? Because there's a couple of arguments that I've heard on the weighting issue. I mean, for one thing, I think it would be fairly ludicrous if you had the number one company and the number 500 company. If you put the same amount of money into both, it would be ludicrous because they're such totally different sizes. But at the same time, there's the argument that it can become unbalanced if one of them is really, really dominant and can end up being a big proportion of a fund. How do you balance that? Are there any safeguards on that? What sort of factors do you take into consideration there?
I think there's a couple. There's one, your fund manager considerations, and then there's your investor considerations. So for a fund manager, if our objective is to track the return and provide a return the same as the market, then our job's to follow the market. So if one of those companies gets to be huge in the market, that's what we're meant to be doing, because that's the promise we've made in terms of the objective. If you're an investor, though, and you're concerned about concentration risk or where you might be exposed, that's what's so fantastic about there being a range of ETFs. Because if you think, well, actually, I don't want that US 500, I want something a bit more specific, then you'll see a bunch of those other specific kind of views, I guess, on the US market. So you could go for mid-cap, which gets you to a middle part of the market, and so you're getting exposure to those. You might decide to be high growth in the companies that count for that. You might decide to be healthcare focused or automation focused. So you can take slices of the market based on what you think is most interesting or where you believe there may be growth. So you don't have to just track the whole market, but I think it is really important when you get those foundational building blocks that those ones are true to the market they're tracking. Because if you are going to have a global view, you're going to want a bit of New Zealand, a bit of Australia, Asia Pacific, America, emerging markets. And so if you want a slice of America, you want the whole slice of America with how that economy is performing. And that's what the US 500 does.
No, it's funny, isn't it? Because funds, they can be a real way for investors to dabble across different areas. And so I see things like the thematics, and it's a really interesting one as well, seeing what themes pop up. The other one that can pop up is investments that are harder to access through just direct stock listings. That sometimes you get funds that can give you access to unlisted companies, unlisted property, or even things like big infrastructure projects.
Yeah.
Am I right? I feel like there hasn't been as much of that in New Zealand, or am I missing it?
No, I don't think there has been. Definitely not in the ETF. And I think if you look in the ETF market, we're far less mature than the rest of the world. And I talked about those other markets before. So if you look at the US, there's now a growth in active ETFs and ones that are actually going to be able to get unlisted product in them. That's starting to happen in Australia, but it's much slower there, and it just hasn't happened yet here. So definitely a possibility, and we look to those offshore markets to see where are those trends happening and where is the interest. But then we have to unpick them for how do you structure that in your own local economy, and how does that work with underlying product accessibility, tax, and other investor structures. So those are things that we look at as well, and I think it's great that we can follow those overseas markets to see where trends might be, and then try and figure out how we can leverage that or replicate it locally.
Particularly infrastructure. I feel like there's been a lot of talk recently. I was going around the country recently, and a lot of people asked me about infrastructure investments, which I thought was fantastic, that the average investor was really keen on that. As you say, it always depends, talk versus action, but there was a lot of talk and a lot of interest. And we've seen huge success on that overseas. I look at some parts of New Zealand now. I don't want to force you into a political position, but there are some obvious infrastructure issues that we are facing. So do you think that there's an investing opportunity there? Are there any particular areas that you think that we should be investigating a little more actively?
Yeah, and I think that a lot of those conversations are happening. And I think the good thing from my point of view is those are happening on a broad financial markets basis. Mm-hmm. And so as our parent company, the NZX, is involved in some of those in terms of just growth of the New Zealand economy and capital markets in general. Mm-hmm. And that's what I actually love about the New Zealand market. I call it collegial competition, which I think is a real strength of ours, because when you put that together, it doesn't just need to be one fund manager's view, and I think I've got this amazing fund that'll settle all light, but actually on infrastructure, that's a really important issue for all of New Zealand. And so the good news is that those conversations are going on about how might we enable that infrastructure investment by using our own investor money and have that return come back into our economy as well, so it's onshore. So yeah, those conversations are happening, and in a collegial manner, which is awesome.
How long do these sorts of conversations take, though, right? It's not the fastest moving thing.
No. Well, I think some of these have been going on for a little while. In terms of background, wouldn't it be great? How do we do this? So I actually think that they're closer to action than they probably have historically been. So that's a good thing.
Exciting. All right, stay tuned on that front. Okay, so you've been here now for what, 8 months?
6 months.
6 months?
Yeah.
So you've got your feet under the desk. You've taken the temperature. You've said you're looking to sort of refine and maybe rebrand a few things. What else is coming next 12 months for Smartshares?
Well, the exciting thing I think about the rebrand is that it's not just like logos and colours, right? I think it's the whole who is the business. And so what's got me excited, and the team who are privy to some of that's yet to come, we're really excited that it does two things. One, it is setting out our stall more actively in the market. And I think that quite often we talk about this active versus passive. And so I really like to stay away from that. We talk about market tracking, because just because you might buy a passive product doesn't mean you're a passive investor. And so for us to be able to set out our stall around what are we doing with Smartshares, and then that'll resonate, hopefully, if we do our job properly, in the market, and we're going to contribute to the continued education and growth of the market, but also internally for our people. So when we're working on all of our products, to give us greater clarity of how many lines of business do we have and what are the key parts of that. Because we manufacture product, absolutely, but we're also a KiwiSaver provider. We also provide corporate superannuation, and that's when we take our ingredients and put them together in a ready-made meal. So each of those have their own identity within our business, and so I think it's part of being able to clearly articulate what the identity of those business lines are, what their objectives are, and then you harness the power of the people all knowing the purpose and the value they're adding every day when they come to work, and we can explain that really well into the market. So that's what I'm excited about for the rest of the year.
And from the investor point of view, when you're looking at the next sort of 12 months, what do you think will be a high point and a low point?
Oh, It's always so hard to predict, isn't it?
Get out your wonderful crystal ball, which I'm sure is 100% accurate.
Not at all. Oh, tricky question. This is what we have investment managers for, to map the markets and have a view. But I think what I'm hopeful for investors in terms of highs and lows is that they have more highs than lows, but also that more people are investing. And so those people have managed to find some money maybe, because that is part of the lows in the economy, I think, in terms of it is tough for a lot of people on a personal level. But for people to be able to dip their toe in if they're not already into investing, and to feel like they've put some money away into something that's going to help them over the long term accumulate more wealth. And so hopefully by buying a haystack rather than looking for the needle, then you're looking for more highs than lows, I hope.
Very interesting, to be sure. Thank you so much for your time.
Thank you so much for having me. Really enjoyed it.
That's Anna Scott, CEO of Smartshares. Now, don't forget, you can subscribe to Shared Lunch. We are everywhere you would expect us to be: Apple Podcasts, Spotify, YouTube, all the rest. Until next time, have a great day.